Hello and welcome to this Friday's morning market briefing. We've got lots to talk about, but firstly, sliding Beijing home prices spur alarm in China's property sector, as well as that Angola quits OPEC after clashes with Saudi Arabia. But we've got lots to talk about on the charts. Also, with lots happening on the economic calendar, we'll come to that near the end, so make sure you stay around till you see that. Before we get straight into it, make sure to subscribe. For the first article, of course, to talk about is Beijing and its home prices. Now, house sellers in Beijing are cutting prices aggressively according to brokers, and this is despite official statistics showing the market in Beijing remaining buoyant. Now, we've been largely covering China as, we do emerge out of this period within the global economy, I guess, in relation to COVID. We kind of emerged out of this period where we had all these, economies around the globe, which, used to interact with one another greatly. And then they're all currently, at that time being shut down, trades being banned, the flow of labours suddenly halting, and we're also seeing that fall in the flow of capital. And as a result, we did kind of see dramatic effects on certain economies more than others, and largely with China being, an economy based on the production and then exportation to other nations, relying on globalization is a key thing which China's, built its economy on. But ultimately, coming out of lockdown, it's not been easy for China to deal with. Not only did they have that really strong COVID policy for quite a bit of time, which kind of shut down the economy domestically, but then also we did then move into a high interest rate era, as kind of inflation was felt across the globe, but especially in Western economies, which would often import these Chinese produced goods. As a result, we have seen that fall in foreign demand for Chinese goods, and therefore, a kind of weakening Chinese economy. As well as that, we've been seeing that those kind of issues grow within the Chinese property market with, certain housing development, kind of companies and brokers and, firms which would manage property actually going into bankruptcy or declining in their kind of engagement, and we've actually seen kind of a drop in housing prices as a result, as we've kind of more and more eased into this kind of housing crisis, which obviously many individuals within China are invested in, as property is the key investment vehicle for Chinese citizens, and therefore having these property sector faults does greatly affect Chinese citizens, bringing down their consumer confidence and just damaging their trust in the government and risking economic collapse. As a result, it's very important to stay on top of China's property sector, and in particular, the kind of key city of China being Beijing. Their home price is important to keep note of, and that's why this article is so important to kind of go through. Now, transaction prices have fallen between 10 and 30% from their peak in 2021, according to 24 real estate brokers, more than 24 real estate brokers in Beijing. And this is contrary to the National Bureau of Statistics Index of existing homes sales prices in Beijing, and adds to the concerns over China's economic struggle to recover from COVID, with the MBS only reporting a home price fall of 1.4% in November year on year. So clearly there is that kind of difference between what the kind of key Statistics Bureau is reporting within China and what we're hearing from the key property development agencies within China, brokers. And this is important to note, as it could add to certain investors' fears that how can investors invest in other parts of the Chinese economy if they can't trust the statistics which might be encouraging them to invest. And therefore, seeing this kind of distrust in relation to foreign direct investment or hot money investments, we can see this large and dramatic effects then take place within the Chinese economy, as maybe investment from abroad does fall, and China becomes even more isolated than we've been seeing in recent years as a result of COVID and high interest rates, of course. This discrepancy has stoked fears and concerns over the quality of China's official statistics, with investors now fearing officials are manipulating figures to meet growth targets. And that's what we were just talking about, with the looming housing crisis risking chilling construction activity, cutting household wealth, and also dampening consumer confidence, which would obviously weigh on the issues already within the Chinese economy even more, which would be highly, highly damaging for China. Now, since the beginning of Q3, home sellers in the capital of, that being Beijing, have started offering steep discounts. Now, the oldest of apartments are seeing the greatest price drops, with newer flats not faring much better, but luxury homes are also seeing prices drop. So, significant falls in prices for properties across the board. We're talking luxury, old apartments, and even those newer apartments, which you might expect to have less damage done to them by these price drops. With many home sellers having been forced to cut prices multiple times in a short period. Authorities are aware of the sector's woes, but have been reluctant to make data public, with the property platform Beak showing that 12% of residential apartments in 28 major cities were unoccupied before being banned from publishing historical transactional prices. So that's important to note as well. If we're seeing the government now limit certain economic agents from making this data public, we could be seeing investors quickly withdraw any money within the Chinese economy in an effort to kind of protect themselves from the possible deceit in relation to the government and the economy. So keep your eyes on this. We could be seeing great effects on the Chinese economy coming soon. So keep your eyes on this. It's an important one. Next article to talk about though is Angola, with Africa's second biggest oil producer, Angola, having saying it's leaving OPEC, and this comes following disagreements over its production targets, obviously damaging the cartel. Now, this is important to note, of course, as we've been covering the topic of oil's prices, oil in the relation to the global economy quite extensively, with we've been seeing quite an interesting journey for oil in really the last 3, 4, 5 months, with the initial speculations of oil reaching that $100 a barrel mark being kind of key in the September-October period, when individuals were kind of looking at the fact that Russia and Saudi Arabia were extending their oil production cuts in order to increase prices and hopefully hit that $100 a barrel mark. But then we kind of saw the speculation from certain weather and kind of more geographic organizations, which were kind of predicting actually warmer winter weather for the northern hemisphere, and therefore less demand for oil for heating homes, and therefore we started to see that sell off. Then oil was reaching much new lows, and then yesterday we spoke about how before that and then we were also talking about following Israel's invasion into Gaza, and Gaza's and Hamas's massacre within Israel, and that kind of caused fears to spike around the possibilities of a regional conflict driving oil prices higher. And then only yesterday we spoke about how despite oil now dipping to new lows, we did see oil take a move to the upside price wise after the issues are mounting within the Red Sea around global trade, and therefore increasing the scarcity of oil barrels as they're not able to reach their kind of destined targets as quickly as previously expected. And now today we're talking about Angola quitting. So it's a very interesting journey, most recently for oil. Now, Angola's oil output target last month was lowered in a series of cuts to raise prices. Now, oil fell 1.8% to 78.26 yesterday in response to Angola's decision to leave OPEC. Now, Angola's since Angola has been in OPEC since 2007, but ultimately was not happy with Saudi Arabia attempting to lower its production baseline, with Angola eventually agreeing to the deal in June to allow for there to be a review of the country's baseline, which enabled the UAE to increase its own baseline for 2024, whilst its own was cut. So clearly this was something that angered Angola, as they were seeing individuals and richer kind of nations such as the UAE increase their production and output, whereas kind of less rich but more reliant on oil, some could say a country like Angola is then seeing production cuts because of OPEC wanting to raise prices. And obviously this kind of these kind of decisions, which sometimes favor different parties, obviously can anger those parties which feel less favored. And this is what we're seeing here with Angola now choosing to leave OPEC. Now, Angola's decision will likely not have an impact on OPEC, with Angola only representing 2% of the total OPEC alliance. So that's something that's very important to note, of course. Now, Angola has been battling to turn around declining production for nearly a decade. Angola has also stood out as more critical, of Russia's invasion into Ukraine than most African countries. And interestingly, Joe Biden hosted Angola's president last month, committing more than $1 billion in the country, including $900 million in a solar project to move the country away from oil. So that's something that's also important to note. We could be seeing, geopolitical kind of, initiatives kind of play into this decision. So keep your eyes on this. That's all to talk about in the articles, though. Next to talk about, of course, is the charts, where we do have quite a few assets to go through. Now, to begin with, of course, we have the US 30, which we did note yesterday as continuing to make new highs. But it does seem that yesterday we did see that sell-off as expected, as we were starting to see the US 30 in particular become very, very much overbought. And therefore, we have now seen this sell-off on both the US 30 and other US indices. That said, we were kind of predicting price to come around and possibly even tap that 38.20 Fibonacci level, as well as the highest high of the US 30, and we kind of expected this to be what was previously a strong area of resistance to then become an area of strong support. So we were expecting lots of orders in and around that area, and price very much neared that area. However, it did not actually tap that 38.20. However, this is to be expected, as prices and kind of movements on the charts aren't exact. There's lots of different orders, so many different market participants within the kind of within the market, and therefore we're likely to see these kind of differences in what may be expected. That said, it did come in and very close to that 38.20, therefore making a move away from that area in a very bullish manner, of course. So that's something that's important to note. Of course, quite possibly we have finished our retracement now on the US 30, and the US 30 could now be prepared to continue to the upside after gaining that liquidity around that 38.20 level. So keep your eyes on that. Next to talk about, though, is the dollar, which is to look what at least it looks like it could make new lows. Now it's in and around this double bottom now. So what we're kind of deciding between is whether we'll form a double bottom now, or in fact we will break and continue lower, as we are now sitting in this liquidity zone as referenced by this previous wick where the low was made. But if the dollar does break below this level, we could be looking at price reaching around levels not seen since July of 2023, so significantly lower levels than we were talking about back in October, for example, when dollar was at these highs. But of course, as we're pricing in these earlier rate cuts, this is to be expected. So it's definitely something that's very important to note in the way that dollar is now making a significant move to the downside. So keep your eyes on whether dollar will break below this area as price did kind of come into contact with this 3820 Fibonacci level area and liquidity zone, and therefore make that and therefore engaged in that sell-off to the downside. So we could be expecting price to now move further to the downside, so keep your eyes on that. Next to talk about though is euro dollar, which because it is a pair which uses the dollar, of course, we are likely to see those kind of similarities between what we're seeing on the dollar but inverse on euro dollar. Now euro dollar is actually kind of in a triple top area. Now this was a liquidity zone which previously existed and acted as a double top level, as we saw here, with price selling off around that same price level. So once again, as we are seeing with the dollar, we either have the potential of price once again selling off, or we do have the potential of price breaking above. But of course, price has gained that liquidity from that 3820 level that we did see on the 15th of December. So it gained a lot of that bullish momentum then, and we have been seeing that run to the upside ever since. So the question will be whether price can now break above that liquidity zone and continue to the upside. So that's the real question, and kind of things to keep your eyes on. Of course, it has that bullish momentum as we've mentioned, however, from that 3820. So keep your eyes on that. Next to talk about though is pound yen, where there isn't too much to say as we go into the end of this year, as we are seeing pound yen just kind of range about and not do too much interesting at the moment. So definitely keep your eyes on pound yen, but at the moment we're not seeing price apart from ranging between these two liquidity levels, we're not seeing price do anything too interesting. Markets are still very volatile for the pound yen at the moment, but keep your eyes on any fundamental releases which may impact pound yen. Next to talk about though is Bitcoin, which is in a very interesting position simply because it is now broken. It has now, broken above this area and liquidity level, which was acting as the top of a kind of range on the charts. So price is now broken above that level and is now kind of sitting around and above there, and kind of consolidating and waiting to kind of make some moves. But it does seem that as we are kind of ending off this year, going into the Christmas kind of holidays, we are seeing Bitcoin kind of stall and hold off. So keep your eyes on Bitcoin, as we are still sitting below those most recent highs. However, there is always that possibility for price to make a run to the upside if we do kind of tap this area of liquidity, which was acting as a significant area of resistance. So keep your eyes on this. Next to talk about though is gold, which is now pushing higher. Obviously it's kind of quieting down gold volatility wise, and was kind of ranging between these two liquidity zones on the charts, but it does seem that we are now seeing a bit of a move to the upside, or at least we are sitting and kind of holding at the top of this liquidity zone. So we do have that chance to now break above that level, and of course if we do see a break above that level, we'd be nearing the 2050 mark, and therefore we might be expecting a kind of retracement back onto this liquidity zone before a continuation to the upside. So keep your eyes on that. Next to talk about though is oil, which did see a sell-off from this 61.80 that we did note yesterday, and I did draw out like this this kind of circle to note the kind of importance of that level, as we do know that price does like to interact with these previous lows that we've seen before, and kind of Fibonacci levels, and price and the Fibonacci levels were kind of lining up perfectly, with this area being of course the key $80 a barrel mark. So it has that psychological level to it, as well as that it acts as a previous area of strong liquidity, previous support, so we're likely to see that acting as a strong area of resistance. Price did fail to move lower from the 38.20, but that was largely as a result of some fundamental news. But overall, the kind of perspective on oil still remained somewhat kind of bearish, and from that we have now seen a sell-off from that $80 a barrel level, as to be expected. So we could now be seeing price make a continuation to the downside after coming into contact with this liquidity level. But at the same time, we're not seeing too much momentum to the downside, so keep your eyes on this, as there isn't as much volatility as one might expect for a move to the downside. That said, we are ending off the year and moving into the Christmas period, so that's to be expected as well. But that's all to talk about on oil. Lastly, to talk about, of course, is the economic calendar, where we do have quite a bit of data coming out today. Now, firstly, we will be getting British GDP growth rate figure and retail sales data. As well as that, we're getting French consumer confidence figure. Along with that, we're getting the Spanish GDP growth rate figure. As well as that, we should be getting Italian business and consumer confidence figure. As for what might be the most important so far, I think British GDP growth rate figure and retail sales data will be important to keep your eyes on. We know that last October, in the October month, we did see actually a contraction month on month for the British GDP, so that's something to keep your eyes on. But yeah, next we're also getting Canadian GDP growth rate figure, as well as the US price increase index figure, along with the US durable good orders data, and finally US consumer sentiment figure. So lots and lots of data coming out today as we do end off for Christmas. That's all from us at Wildwood Capital. We've covered a lot on the articles, lots on the charts, and lots on the economic calendar. Wildwood Capital will be having a week off for the Christmas period, and nearing New Year, but we will have a week off, but we'll be back with you in nearly a week. So we'll see you again then. Take some time off during Christmas, enjoy it. Markets will be moving slower than usual, so just understand that if you are still in the markets. But I hope you have a great trading day this Friday. Have a great one, and see you later. Bye.